Porter Collins and Vincent Daniel worked under Steve Eisman at Front Point for the first decade of the 2000s. So if anyone's seen The Big Short, they worked for Steve Carell's character. And you rode in the Olympics in 96 in the 2000s.
Yep.
But then you mentioned in Edwin Dorsey's idea brunch that you took a pretty big pay cut to go work on Wall Street. So I wanted to ask, what made you want to work on Wall Street, and did you make the right decision?
So I at the time was working at a hedge fund in New York City called Chilton, and it was a great job. But Steve decided it was time for him to go out on his own and start his own fund. And I was going to be the sort of junior partner at the time, the most junior partner. There was going to be four of us. So I was the most junior partner, and I felt like it was just a bet on myself to see what was going to go on. And so, and it was that. And so, through the, '03, '04, '05, I made meaningful contributions to the fund in terms of performance, and they sort of bumped me up to a bigger level. And so it worked out that way, and the fund grew from $50 million to $2 billion along the way. So it was
Nice.
it worked out well.
So I still get chills when Greg is in that office and they're pitching you guys that idea. Was there actually Jenga blocks?
There was no Jenga blocks involved.
Okay. Okay, darn. So how was that meeting? Like, what was it like realizing that there was actually something wrong with the financial system?
Well, it wasn't, I don't know who knew more, but we knew more about the plumbing and what was going on than he did. He was selling a product, and he was selling, because Deutsche Bank was long a lot of stuff, and he was just the short to the Deutsche. He was this big, and Deutsche Bank was this big, right?
Yeah.
And we worked for this place called Front Point, and Front Point had a bunch of different funds within the business. And there was a big fund that owned a company called New Century. And New Century was a subprime gain on sale lender, and they converted to a REIT. And because most of the financials guys hated it, it was very low priced, and it had a huge dividend yield. And the other fund at Front Point owned a lot of the stock. And so we got this phone call from him saying, hey, I know you guys are long New Century. Would you like a hedge to that? And then we said, we're not long New Century, we're short it. And we were short basically everything in subprime. We were short basically everything in financial system. And this is in 2006. This is the spring or summer of 2006. Okay. And so he came in our office and pitched the product, and we were very skeptical of him and the product, as you can kind of see in the movie. Like, we just didn't believe that. Why would in the history of Wall Street, no one's ever come and pitched us a short. They don't pitch you shorts. And so he was pitching a short, and eventually, we modeled out all the securitization tranches ourselves and put that on. And so we sort of did that, and then, as we modeled out the securitization tranches, and you can start to see the deteriorating loan quality, we knew it was over. And so, we were very, very involved in the business before that.
When it actually happened, I was maybe in like fourth grade, I think. So I didn't really have any experience real time, but I enjoy looking back at it. It's pretty interesting. I guess, like, to give you a little bit about myself. So I'm still in college. I am an economics and finance major, and then I did some equity research. I do it on and off while I'm not busy in school. I work with Kurt Feschbach. I don't know if you have heard of him, but like in the 80s. Yeah. Yep. In the 80s, he was.
How did you find that?
Some lady, I had reached out to had been doing some contractual work for him, and then she ended up recommending me to him because he was looking for some extra help over the summer. So I worked with him for a while.
And what does he do? Does he run a fund or runs his own money or?
Right now he just started a new thing called the Bindle paper. So it's pretty much just research, and he sells the research. Gotcha. So I don't believe he's actually running money right now. So I believe a Bindle paper is something in crime scenes where you wrap evidence in a little piece of paper and deliver it to the police station or something like that. Gotcha. So yeah, that's a little bit about me. But I guess, do you want to chat a little bit about the current environment?
Sure.
So I guess first off, how do you think Powell has done in the last couple of years?
I think, I don't know that he could have been any worse. I mean, he's gotten pretty much everything wrong, especially the last year in terms of, you know, and listen, it's part of the whole. It's not just him; it's the whole Fed and their belief of QE. And you know, they have this belief called portfolio balance channel, right? And if you look it up, you'll understand what that is. And it basically says that if we do QE and buy government bonds, we're going to take the rates to a level where I shouldn't be, they first of all take the risk-free rate to zero,
right?
And says, like, you can't invest in government bonds anymore. You can't invest in mortgage backs because we're going to crush the yield. So go out and take as much risk as possible, and we're going to anchor that at the end. And so they've systematically been doing that through QE1, QE2, the twist, QE3, and then whatever this COVID mess was. And so, I'm of the belief that, the rates should never be zero, and the risk-free rate never should be zero. And, the counterpoint to that, which a bull will say, was like, well, you're not taking any credit risk. Why would, why should you earn a yield? And my point is, well, look, what's my purchasing power like when I in 10 years? I'm getting 1 something percent, but by my real yield, I'm going to lose 20-30%.
Yeah,
my purchasing power. And so I think they've bastardized modern economics, and they basically did exactly. I'm more of an Austrian economics person, but I appreciate what Keynes had to say, but they took it to a level where Keynes always said when the economy's good, the government shouldn't be this heavy-handed force again. They should get out of the way and let the private sector take hold. Well, when have we graduated to that step? We haven't. We tried it, and Powell. I give Powell credit. In 2018, he came in and said, well, the government, the government, the Fed's too much involved, and we're going to do QT and unwind this stuff. But the market, soon realized that there was a Powell put, or there was a Fed put, and the markets went down too much, and he reversed course. And so my view is that they can never, ever, no one's ever really exited QE, right? And this is the ultimate form of financial repression. And, they should have not only ended QE last spring, but started hiking rates. But they were doing 120 billion a month all the way through this. And, there's no surprise that, along with the supply bottlenecks, right? You went from a demand problem to a supply problem pretty quickly, and the Fed missed all of that. Right? They didn't. You know, they just said it was transit. They missed every single part of that.
Yeah.
And so now we're left at a point where, you know, the bulls are crying because they think, you know, he's going to make a policy mistake. Meanwhile, we haven't finished QE. We haven't rose rates. And, you know, I know everyone expects, you know, inflation to come down, but it's accelerating at this current moment, not decelerating. And yes, part of that's Putin, but, you know, they left themselves no wiggle room. They left themselves zero wiggle room. And maybe Putin knew that.
Yeah. You've said before
that's my 2 cents.
Yeah, it definitely seems like they painted themselves into a corner, and
I mean, no seeming. They did. They completely painted themselves into the corner with absolutely no safety net around them. You know, but I also think we're in a massive energy crisis at the moment, right? Caused by the whole ESG movement, and not only ESG movement, but you know the shale pass lost a lot of money. It lost I forget what the exact numbers was, but it was a lot of money. It was a couple $1 trillion over you know 5-6 years and drilling for nothing, and so. You know, now you have OPEC, which is dwindling reserves, which, you know, and then the shale people aren't reinvesting enough capital given the decline rates that, you know, the supply of energy is going down. Post Fukushima, you know, the Germans and everyone and the French said we're going to phase out nuclear. Right, the Americans did the same thing. They're, you know, New England had 3 nuclear power. They had 3 power plants, and they're phasing out 1. You know, they're phasing them out in California as well. You know, people decided they don't like coal; they want renewable energy. But the problem is that nothing is as dense as nuclear energy, nor coal, nor gas. And so you've had this awful convergence of, you know, the shale losing money, ESG revolutionaries, and they've killed themselves. They've killed us.
Yeah. Did you read Josh Young's research that he did with bison?
I did not read his research, but, you know, I've read, you know, the book Twilight of the Desert, and I've read a bunch of different things on this, and I mean, I follow Josh, but I haven't. I mean, I know the basic gist of what he's saying.
Yeah. So the supply of oil is pretty much dwindled down, and the demand is doing the exact opposite.
Well, so the other thing is that, you know, okay, so we're going to all go to electric cars. Well, how are you going to power the grid with that? In the summertime, you know, when everyone's plugged in their cars and the air conditionings are going full, you know, whirl, how are we going to do that, right? And you know that's when the sun doesn't shine and the wind doesn't blow in the summertime, and you know, so we don't have the battery power to do that, and so it's sort of this top down, you know, I don't like the word wokeism, but you know, but holier than thou ESG movement that killed people.
Yeah.
You know, Harvard won't get back into the, you know, fossil fuels. You know, these big institutions won't get back in there, and so they'll refuse to pivot backwards and reinvest in that. And so I think that because of that, the crisis is ongoing.
Okay. Yeah. You said that. Let me see. You said that the Fed definitely painted themselves into a corner. So the QE has gone way too far, and Powell said yesterday that they plan on 25 basis points in March 16th. But to me, I guess it seems like 25 or 50 basis points are both a bad option for the equity market, obviously. because 25 basis points, we're stuck way behind inflation. But then 50 basis points obviously is also negative for the equity markets, just in the sense that they're inversely related. How do you see the rate hikes going throughout the year, I guess?
Well, they don't want to. They obviously don't want to hike rates because they're afraid of their precious markets, right? Their financial conditions, and so it's a little bit like a horrendous parent when they're giving their kid candy. They're giving their kid candy, and they have a temper tantrum, and instead of removing, because you want to remove the candy, and they have a temper tantrum. And instead of saying, "Oh, tough shit, it's not good for you," and letting them let them deal with themselves, you just gave them more candy.
Yeah,
there's no difference.
And now they have a stomach.
Like a fucking 2-year-old could have figured this out.
Yeah,
but they didn't.
Yeah, yeah, definitely tough situation now. Didn't have to be, but okay, so. I agree with you pretty much on everything you're saying, but I just want to play devil's advocate for a second. I guess some people are saying, bulls obviously, are saying that inflation is still somewhat transitory and that the high year-over-year inflation numbers are just justified because prices fell drastically during the pandemic. I guess how do you feel about that argument?
Well, first of all, they didn't fall drastically during the pandemic. Were they below? I mean, first of all, how do you calculate inflation, CPI, right? If the Fed was calculating CPI the same way they were in 1980, CPI would be currently running at 16% right now. But through the magic of Fed hedonics, they've now moved all these calculations around, and they've been doing this for 50 years of sleight of hand to try to make the CPI not look as high as it is. But they're also pushing the outer bounds of how much manipulation of that data they can do. And so, just look at house prices. Right? If they did it on house prices, they'd be up a lot. Inflation would be a lot more than 7.5%.
Right.
And food prices are about to go parabolic with wheat doing what it's doing. And so they magically do this. In the 70s they did this X food and energy, right? To not calculate your energy crisis or your food crisis. And so. What I think the Fed is doing is just praying. They're praying Putin invades. They're praying, we have an economic collapse and disaster, and their inflation will come down.
Right.
And that's what the people who own technology stocks obviously think too.
Mm-hmm.
They're in this perverted circle of, I want the growth to slow, therefore, you can only own my stocks.
Yeah. Yeah, it definitely seems like
ever higher multiples because the discount rate is 0, and so nothing matters.
Yeah.
Right? Why would you? People thought in the .com bubble that 10 times sales was, in hindsight, crazy. Look where Snow trades right now, right? So
yeah, I think I was looking at that earlier.
Snow trades at probably a great company, trades at 33 times next year's revenues.
Yeah, expensive.
To say the least. The other thing that people have been doing is that they've been throughout the last 10 years doing this adjusted earnings. Right. And so while Snow looks to break even on an adjusted basis next year, in reality, they're going to lose $2 in earnings.
Yeah.
Right. And so They say they don't, they take out stock-based comp, which doesn't count, I guess, and they take out all this other stuff that makes them look good. It's been a masterful faux game of trying to manipulate stocks higher, and the same thing happened with the IPOs, right? The bankers know this, so they only IPO 5% of the company, and the first day no one can buy it, so it squeezes up 100%. Then the shorts get in, and then it squeezes up even higher because there's only 3% of the short that's tradable. And lo and behold, a year or two later, as all the insiders sell and they unload the thing, the stock's magically a lot lower.
Right.
Meanwhile, retail investors were looking for 10 baggers, and they've now gotten destroyed.
Yeah.
For the greed of Wall Street. This is the bloody and greedy side of Wall Street, and they know exactly what they're doing. The SPACs vehicle, look at Chamath. How much money has he burned shareholders for, and how much money has he lost? Nothing. He's made
not a thing
of millions of dollars off this.
Yeah. So I don't remember where I read this, but I think you said like the Fed's intent has changed, and that intent shift kind of opens the door to short in markets again.
Sure, that was in June of last year. Remember when they cut rates in the pandemic, they said that we're not even thinking about raising rates.
Right.
Right. And then in June of last year, I don't remember the wording they used, but they finally changed their tune in terms of what where they were going to take policy. So tighten policy, or try to tighten policy, or whatever their bullshit jawbone policy is, and continues to be.
Right. So now they're tapering their QE. So what happens eventually when they need to shed their balance sheet, I guess?
Oh, they don't need to do anything. The Fed has the longest lockup in the history of mankind, so they don't need to do anything. I don't think they will unwind the balance sheet. We saw how that worked in 2018, and I think it's going to be too hard for them. And so I don't think they will. I've said for a long time that I don't think the Fed will do QT, quantitative tightening, and so because they're not tough enough, and frankly, the American people and the American investors are not tough enough to withstand pain, and that's too much pain.
Yeah.
There's no one knows. I mean, half the people in this country aren't working because they want to sit around and work on their own time and take more vacation and all this type of stuff. So, no, the stock market, and we've conditioned an entire generation of kids this, and it's just morally irresponsible.
Yeah. Okay. I guess this is a little bit different toned question. So do you have an opinion on ARK, and do you think that she has a disadvantage because she reports all of her buying and selling?
Listen, it was just a fad.
Right.
That's all it was. It was a QE fad, and she hopped on it and put a great marketing label of innovation, and did a good job of getting on CNBC, and people believed it, and she was jumping up and down, and she was putting up great returns, and Tesla was going up like crazy, and then everyone jumped in, and so I don't think it's anything more than a fad. Do the active ETFs and their position posting, I think it works both ways. Maybe it's good when things are going up and bad when it's going down. So, same thing as Chase Coleman and Tiger putting up his holdings, right? People look what he owns and see as much as going down. Same thing was going on the way up. It worked very well, and now it works really poorly.
Okay, so the oil demand and supply issue, obviously, now that there's like geopolitical tensions, how do you think this affects airlines and cruise ships in the coming months?
Um, I think I think there's a lot of demand for people to travel,
Yeah,
and I think that some of the corporate demand will pick up. I think especially in Europe, which has been relatively more closed, I think demand will, on the personal basis, will pick up a lot. I haven't looked at the most recent tourism numbers, but they're still down a lot. And I think if you look at the balance sheets of the consumer, they're at an all time high. And so I think people are going to travel. Is accrued an input cost to some of these people? Absolutely. The some of these stocks like I would think Ryanair would be doing very well, but they own a carrier which I think they own part of the carrier. I forget exactly, but that flies in and out of Ukraine, and so obviously that's a big issue. But
right.
But I would think all else being equal, things are very good for the airlines. But crude oil is a big input, and so it hurts.
Yeah.
And
Yeah.
then there's the added worry if the economy slows down because of what's going on, the demand won't be as rosy as people once thought.
Yeah, definitely.
If this Putin ceasefire eventually happens, which I don't know that it does, well, near time, that these stocks are going to go up a lot when that happens.
Yeah. Yep. Okay. So pretty much the best case scenario for the equity markets is that inflation prints start to come down. We raise dovishly maybe like 1% or 1.25% throughout the year, and we finish the year with inflation around, I think they're hopeful for like 4% now.
The Fed said 2.6%. Obviously, it's going to miss that.
Okay, yeah, definitely going to miss that. But
I don't think people fucking care. They just care. They just believe that the Feds can't. I mean, the economy is too levered that we can't raise rates that much before everything collapses. And so this is why I've said that we're in a debt trap.
Yeah,
You can't get out of it. There's too much debt, and my issue with the risk-free rate at zero, we've created all these zombie companies that can't service their debt, and it's a real problem. And it's the Fed's fault. 100% the Fed's fault. Yeah,
definitely agree. There just doesn't seem to be like a real bullish thesis out there. Like I agree. I'm definitely not bullish.
You know how hard it is for people to say they're actually negative. Like it doesn't, like people's psychology is so warped that this is just cycles. This is not like, it's not like rocket science. It's not like where I'm anti-American. This is just like the economy goes through natural cycles. And the real pain point for this cycle was inflation, because that's the one thing that the Fed can't fix without raising rates and without pulling the party. And now we're here raising rates, and it's a problem.
Right. So yeah, I don't know. I just don't see any real like bullish theses out there.
So, I mean, if oil stays at $110, you can own these stocks all day long. Yeah. But no one wants to. Because everyone thinks they're going to come back down, and then the other people don't like them because of ESG, and why can you? People hate owning stocks based on a thesis that's negative. It's like owning a
Yeah.
shipping company. Oh, like because there's a glut of there's a supply chain issue, so rates are going up. No one actually wants to profit on, a bottleneck in pricing.
Yeah.
But there's a lot of money to be made.
Yeah. That's interesting.
People want like, oh, I can put in my model and I can see 4% growth out in perpetuity, and put a stupidly high multiple on that, and that therefore, earnings will go up, and then it'll take my multiple higher, and then it's stupid, it's dummy math. No one actually wants to do hard work and dig in and buy a stock which has problems and find the inflection point of when it wants to turn higher. And so we conditioned a whole generation of investors to put it in a passive ETF and do nothing.
Yeah. Take the lazy way out. All right. So I don't have any more questions about the current market environment, but did you make the right decision? How do you feel about working in the industry? I guess, how has life been? How's it treated you? I guess.
I'm very lucky. I have no complaints whatsoever. It's been, obviously I have a very blessed career on Wall Street and doing all this stuff. I think I've made my way a bit differently than most people, about, going to where, not chasing the herd. And so, I like doing that. That's what I do, but it's harder, right? It's harder to raise money. Like, if I was you can raise a lot more billions of dollars and do all this other stuff.
Yeah.
First one, probably. Sorry.
No, it's all good. Yeah, I think, like personally, I'm definitely more contrarian by nature, and it just feels right. I mean, if
it's not easy, though.
I guess
like this is like a, this is a glimpse of the past 10 years. You would have wanted to put your head in the closet and not think, because this QE has just allowed people not to think.
Right.
And I think that we'll see what life looks like outside of QE. Yeah,
we will, for sure. Steve, you, Vincent, and Danny Moses was the third trader, right?
Danny has a podcast called On the Tape.
Okay, does he?
Danny's fantastic. So he is he's a fantastic investor. No one better in a bear market today. So he sees things that no one else sees.
That's awesome. I'll have to give that a listen.
Yeah.
I think the reason I look up to everybody in that movie the most is because, like, they weren't afraid to call BS on the entire system, and they actually stood up and they were right. So that was a really cool thing.
And listen, we it's not like we were quiet about this. We were loud, and no one wanted to hear it.
Yeah.
Oh, no one wants to hear anything negative. They don't care.
No.
They want to hear. They want to hear the right outcome for them.
Exactly.
And if the outcome for them is painful, they're not going to listen.
Yeah. Like
that's just human nature. No one is going to do that.
Mm-hmm. Like sometimes I wonder, are you bullish because you're long, or are you long because you're bullish?
Exactly.
Yeah. So it's definitely engraved into, I guess, the human mind. So
yeah.
Yeah. I don't really have any other questions, but I want to say I really appreciate you taking the time out of your day.
No problem, man.
Coming and talk. So yeah.
All good. And if I can help in any way, just let me know.
Yeah, I appreciate that.